Welcome to the Wealth Wizards podcast. Today we have a special guest, Jack from Startup Trading, one of my mentors in trading, and I am super excited to have him on. We're going to learn tons today. Welcome, Jack. How are you today?
Doing well. Just getting my Sunday going. Made myself a nice breakfast. I actually have later. I'm doing an interview with one of my students who's now been trading full time for 7 months. Which is, anytime I have a student, that's my goal is to get them to trade full time. So I'm pretty excited to talk to him later today. But that's what I got on my agenda. I've had a great weekend, a couple nice dinners. Got back from Costa Rica last week, so I got nothing to complain about over here.
Beautiful, beautiful. So let's get started with the questions that everybody wants to hear. And it's, how did you get into trading? Like, what was your beginnings and what were some of the obstacles that you had to go over in order to make this your full-time job?
For sure. Well, it's kind of an interesting story. I actually bought my first stock when I'm 15. I'm now 32. So I've technically been in the market for 17 years by that math,
Wow.
but by no means have I been actually trading that long. I used to read the Forbes 500. My dad had a subscription of Forbes, and every year when that came, I just had this idea. I was always I would call myself a hustler when I was young. So Pokemon cards, Matchbox cards, candy bars, like whatever it was. Like I was just interested in business more than sports or school. And so I'd read the Forbes 500, and every time I would read it, it would either be like a lot of these guys that are super wealthy. If you've ever read the Forbes 500, it's investing, hedge funds, or they'd own a company. And I realized at that age, all of their wealth would be tied to the stock market. So I was like, I should probably pay a little more attention to this stuff. So I started reading books on investing. When I was 15, I had a lawn care company. I saved up some money, and I remember like when Google IPO'd and all these companies IPO'd, I couldn't open a brokerage account, so I'd always tell my dad, "Hey, Dad, buy this stock. Hey, Dad, buy that stock." And the stock would go up, and I'd be like, "Hey, Dad, you buy that stock?" And of course, why would he listen to me? He never did. But he was like, because I would give him some shit because these picks were great, and he'd be like, if you think you know what you're doing, why don't you give me your money? And so I saved up money for my lawn care business. Gave it to my dad to start buying stocks. Of course, the first thing I bought was it's called CFRI. Everybody kind of remembers their first ticker, and it was like a penny stock. I bought it like 28 cents, went to $1.32, and then like I thought it was Warren Buffett. It was a period of 4 days. I had like quadrupled my money. I'm like, this is easy. Of course, ended up shortly crashing thereafter. But by that time, I was absolutely hooked. And then forward progress, I go into freshman year of college, 2008. Markets crashing. Everybody around me is like, stock market's a huge topic. And honestly, this is probably when the online trading community really started to pick up in 2008. There is so much more information out there now, so many more educators, so much more stuff on YouTube, podcasts, etc. That stuff did not exist when I was starting really in 2008. It was mostly like blogs, which nobody even hits up blogs anymore. And then I just started doing research online instead of going to class. Well, I would either go to class and trade, and then I decided somewhat halfway through my sophomore year of college, I was like, well, I don't really want to. I was going to a private university at the time. Education was north of $40,000 to $50,000. I was like, it might not be the best use of my funds. So I decided to actually drop out of college and pursue trading full time. In a short span, that's how I got into trading.
Beautiful, beautiful. So to clear this up, make it clear to people that you didn't have any background in, like, your dad, your grandfather didn't do trading for a living.
Oh yeah,
and
no, my parents weren't even necessarily supportive of my decisions. They actually like. I've always been a little bit on the wild side as a child. Like I was not the most well behaved. I was never a great student. Like my parents sent me to boarding school. So when I was like, I'm dropping out of college, they were like, all right, well, good luck from us. Like basically, like I had a car they had given me, nothing fancy, like a 99 Buick. It's not like my parents, had me driving around in a Mercedes or something. It was like my grandpa's old car. They took that away from me. They paid my cell phone bill at the time. They took that away from me. And my dad's in sales. So, very traditional guy. My mom's a nurse. And to them, the idea of me who, it's not like I was consistently profitable by any means, which I don't recommend anybody follow this path, but I just knew, I'm like, I'm not going to spend 3 more years spending, $40,000 a year to go to a college where I know that even when I graduate, I was going for finance and economics. This is not going to get me a job trading. And that's what I want to do. So is where my passion lied. I just didn't feel justified going to class, spending that kind of money. And honestly, like most of my teachers were ESL, which I thought was ridiculous. I mean, nothing against anybody with an accent, but if I'm paying $40,000 a year to learn, I found it like a difficult, a lot of my classes where I couldn't even understand. Like I had a math professor from India, like totally brilliant guy, and nothing against his accent, but like it's hard enough to understand sophisticated math problems, but to learn it
Yes.
in somebody who has like horribly broken English, and I'm like $40,000 a year from this risk reward. Like I don't know. I was just crazy enough to believe that if I dropped out of college, I'd be able to figure it out, and so I did without really my parents' support. By any means, my dad's not a trader. Nobody in my family is in finance, not even remotely. So
Beautiful,
yeah,
beautiful.
and
So
I didn't really have help from
this
them.
serves as a great example that you don't need that background in order to make it in trading. Now, my next question is, who was your mentor in finance? Because in the trading community, because mentors outside, like on personal lifestyle, it could be different. But like in the markets, when you decided to do this full time, I'm pretty sure you looked up to certain people. Who were those
Oh yeah,
people, and
absolutely.
what made you
The
choose them?
yeah. So actually, the first I don't even remember the guy's name, but it was the first thing that made me think that I could figure out how to trade. I saw some guy take like a $2,000 options account in 2008 to like 100 grand in like 4 months. I was like, and that was like when I was like, oh, I can do this. Like this should be easy. Like I don't even remember that guy's name, but that was kind of the trigger that got me into it. I would say one of my bigger mentors was Tom Sosnoff. And not even in my current trading style is not really related to anything that he does, but he's a finance genius. He's he's a creator of Thinkorswim. So if any of you guys have ever heard of Thinkorswim, the software, he founded that. A Chicago guy, worked in the pits, and then built Thinkorswim after kind of the pits were dying down. Sold it for $700 million. Then he built Tasty Trade and Tasty Works. I think of the name of the companies. Maybe you guys have heard of them. They're option brokers. So he built both of these multi-$100 million companies. But I have a personal relationship with Tom. When I was 22, so 10 years ago, believe it or not, I had a TV show actually with Tom. It was like an internet TV show. It's called Get Trading at 22. And he was really one of the first guys to ever teach me more of like complex derivative trading. And we're not talking about, looking at charts. We're not talking about head and shoulder patterns, which I think most people come across when they first start trading, whether it be in a book or, a photo on Twitter or a blog post on Instagram, whatever it is. But he was teaching me how to, basically be short the NASDAQ against the Russell or sell a calendar spread in, in options markets or the grains. And that was really more of the first sophisticated, and it's not even like it's extremely sophisticated, but just more in-depth levels of trading that I learned from him. Also understanding like the Black-Scholes module, which I think half the traders in options don't even know what it is these days. All
Exactly.
the YOLO traders that are just swinging weeklies couldn't even tell you what that means. Which I think is kind of funny. I traded more options back then. That was like 2012. I guess 2012, 2013. But yeah, he was one of my major influences. He's a super unique character, really smart guy, both in the business sense and the finance sense. I would say he was definitely one of my influential people, and I'm lucky enough to know somebody of that stature. And then of course, you got Jesse Livermore or Paul Tudor Jones, but like on a personal level, I would go with Tom Sosnoff.
Beautiful, beautiful. And what lesson do you think you took with you, and like that's been something that you refer back to in tough times, and when trades go left? Like, what's something that you picked up from him, and you still to this day implement?
I think one of his favorite lines that I like is called "trade small and trade often." So when you understand, and when I first got into trading, this was one of the things that just absolutely plagued me. I was not trading small and I was not trading often. I was looking to go heavy position size because I didn't have a lot of money. I was doing heavy position size, and kind of just levering those bets, just assuming that I was going to be able to multiply my money faster by concentrating my bets in risky derivatives like options. Horrible idea. You just blow out account after account. And then really his idea is to trade small, trade often. Well, number one, when you're trading often, you're spreading your risk over a series of occurrences. I think a lot of people, when they think about investing, they think it's risky because maybe they have concentrated positions, maybe they only have 5 stocks. And so every day they look at their portfolio, those 5 stocks are all correlated. And so there's a ton of risk. But when you're trading and you spread your occurrences over, say like me, I'll take anywhere from 7 to 12 trades a day. I'm taking a large number of occurrences, relatively speaking, compared to most traders. I mean, I know some people like high frequency traders, whatever, they're taking millions of trades a day, extremely small risk. But trade small and trade often. Trading small risk, obviously, that's what he means by that. Do not be exposing yourself to extensive amounts of risk. Your trading will take care of itself. If you're betting too much size, you're going to find yourself in a bad position. And then trading often is just allowing those number of occurrences to play out over a smooth equity curve on over time.
Beautiful, beautiful. So now that you mentioned that, let's get into what you actually trade and what you do on a day-to-day basis, which is futures. And online, YouTube, Instagram, you don't see that, like options traders where everybody knows about quote unquote options now. Everybody knows about stocks now. But you don't see people trading futures as much. Can you tell us a little bit more about futures and how you got into that?
Yeah, the interesting. Yeah, futures. It's you have like your whole online viewer space, people that I guess are just more represented in the social media marketplace with trading. And I really don't know of any other futures trader that probably has as big of a following as I do. Not to like flex or anything. I mean, I don't have like a crazy following. Like I just screw around with my Instagram like anybody else. But futures trading. Let me give you guys the basics of futures trading as simply as possible, and then kind of go into why I trade it. But when most people hear the word futures trading, they make it way more sophisticated than it is. They're thinking about, oh, are you trading something in the future? Realistically, it's very similar to stock trading. And I trade what are the 4 indexes, which if you're aware of trading in any way or form, you're probably aware of some of these indexes. So the S&P 500, right? 500 stocks, the Dow, the Russell, which is all small caps, and then the Nasdaq. Those are the 4 major indexes in the United States, and they'll have what the QQQ is. So that is the ETF, or the SPY, the SPY. That's the ETF of the S&P 500. QQQ is the ETF of the Nasdaq. IWM is the ETF of the Russell. These are all baskets of stocks. So with baskets of stocks, you're never exposed to the individual, like a CEO resigning or an earnings event. You're never exposed to these individual risks. These baskets of stocks also have what's called futures contracts, which are just another form of these same products that have very similar price movement because it's basically arbitraged out, except you can trade them with leverage and you can trade them basically 23 hours a day. Tonight, it's Sunday. The market is going to open at 6 o'clock Eastern. It'll trade all the way tomorrow till 5 o'clock, close for an hour, reopen at 6, and do the same thing every single day. Now, futures trading in most brokers allow you to have quite a bit of leverage. I don't recommend most traders use that leverage, but so we'll use the S&P for an example. The S&P, let's just say it's at $4,000. Every single point up the S&P goes or down is equivalent to $50 in each futures contract. So that is the product that I trade, those 4 indexes. If I go any deeper, I feel like it'll get a little too sophisticated and I don't want to lose anybody there. But I'll tell you what the reasons I like futures trading and why I think it's a great product for other traders to trade. Number one, the tax benefits. It's called the Section 1256 of the U.S. tax code. The first 60% of your gains are taxed at a long-term capital gains rate. So that means a trader who makes $1 million a day trading futures compared to a trader who makes $1 million trading stocks is the futures trader will pay less in taxes. Another thing that's really cool is it's traded around the clock. So when I was in school first, I like to be able to look at the market either early in the morning or late at night because I had a job, going to school, making money, and it was important for me to be able to participate in the market on my watch, which isn't always, especially you have a 9 to 5 during that time frame. And then another one of the things, people really find themselves attracted to options because of the leverage, because they can make 400, 500%. Well, what's interesting about futures, although the percentage gain is a little different, say if I'm risking 5 points, so my stop is 5 points and my target is 15, well, that's technically a 300% return on your risk. So I think most people don't look at trading as return on risk. They think it as return on, like if you put $100 in an option, it goes to $300. You're like, oh, I'm up 200%. But it's like those trades are happening all day in the futures market. They're just structured differently because I look at it as a return on risk instead of like a return on like the amount of capital you're laying out. And another reason I like futures trading is you don't have to worry about, I trade 4 markets. I trade the same 4 markets every single day. I know them intimately. I know the news events and when they're coming out, things like PPI, CPI, FOMC. These are the market news events that happen at the same time and they're on a schedule. Nothing's ever a surprise. And I never have to worry, do I have to pay money to borrow this share or this stock? There's no paying to borrow. You can short at any time. You don't need any of that. So for me, I hate rumor chasing. I don't want to know what the next hot stock is, what the float is, what the average volume is. None of that is really relevant to me. And so it just, for me, it simplifies trading. I'm focusing on 4 products and I don't have as many surprises as I would with stocks. And I don't have to worry about, hard to borrow. Or they're also the most liquid markets, basically, in the world. So liquidity is a huge thing. Not that I have an issue with liquidity because I'm not trading $100 million, but hopefully one day I am. If you're I have plenty of friends who are stock traders, and they're pretty big stock traders. They have liquidity issues. They have to stay away from certain markets because there actually is not enough liquidity or money getting traded back and forth to trade. You're never going to have that problem in the futures. And if you do, you're probably ready to retire.
Beautiful, beautiful. Thank you for that mini lesson on futures there. Everybody should grab their notebooks, rerun that back, and take some notes on that. Now, usually why people get into options is because the low entry barrier, like you mentioned in your example, the $100 getting in. Now, if you're starting a futures trading account, what's the ideal starting amount? Is it something and like I see you have this funding method as well. So I want you to go into details because you do mention that a lot. You do show that on your platform, how you help people get funded into these accounts. So just give a little bit more details on that and how people can get started with that.
Okay, just a little bit of a breakdown. So I work with a couple of different prop firms that help traders get funded with futures that put over $25 million in traders' hands. So I always recommend people we all want to make money trading, but oftentimes when we start trading, that's a little too much of a forefront thought. You're like, hey, I want to make money. I want to make it immediately. And you're not thinking about the process it goes to take there. So anybody who goes through my program, this is what I recommend. I do recommend paper trading first. And I think anybody who says something else, I strongly disagree with people who say you should not paper trade first. Number one, it's not like you have endless money. If you blow your nut, you're going to be emotionally beaten down. You're not maybe going to understand even how to execute on a platform. But
yes.
So you want to absolutely start off paper trading just to know the order functions. How many of you guys know how to place an OCO? Do you know how to place an OCO? Are you trading live? If you don't know what an OCO is and you're trading live, you really haven't even done the research. OCO is order executes other.
Yeah.
These are all different order functions that most traders should know if they're really taking it seriously. And you're not even going to get to that point unless you first start on a demo. So I always tell people start on a demo. Now your question, how much money should somebody have? There is a product that actually recently came out in the last, I think, like 2 or 3 years that did not exist when I first started trading futures, and they're called micro futures contracts. So they're small. Like if you trade a mini, so they used to have the bigs, and then they had the minis, and now they have the micros. But as the index gets bigger and the moves, so we went from maybe 20 years ago a 4-point move being 0.5% to now a 40-point move is like a daily occurrence. So the volatility, because now we're at 4,000, we used to trade at 400. So if you caught 1 point when the market was 400 points, that's a lot. 1 point when the market's 4,000 points, not so much. So they've created and divided the last futures contract by a tenth. So that means 1 point in the S&P 500 is equivalent to $5. So this is where, I encourage people, like, with $2,000, I think you can trade micro futures contracts. $2,000 is in your account and not be exposed to extreme risk, not be exposed to mad drawdowns. But if you want to start playing the game, knowing what it's like to have some skin in it, and being comfortable risking. So my risk on per trade, a little bit into my strategy, I risk what's called a 1.5 times the average true range on the 5-minute chart. So if we're moving on average, say 10 points every 5 minutes, I'm going to risk 15 points. 15 points times 5, so that'd be $75 would be a risk per trade. Now, it's not like that's no money. I mean, $75 if you're working a minimum wage job, like that's still a lot of money. Yeah. But 15 points would be a pretty wide stop. I mean, you could also trade in volatility where the average range is like 6 points, maybe risking anywhere from like $25 to $30 a trade. But the minis are really a great product, the micro contracts are really a great product when you first start trading. So I would start off with a demo account. And if you guys are interested in learning more about this, just honestly, Google's your best resource. Take some notes on some of the things I'm saying. Demo futures account. Trade-Evate is a great platform. There's whatever you guys like to use. It doesn't really matter. But if you start off with a demo account, then move to trading micros, and then if you're comfortable, or consider yourself, I say you should be profitable for 3 months before really stepping up. But then I also work with funding programs, which basically is a one-time fee. So if you want to get $300,000 to trade with. So I actually just did this for my room. So I took 2 different accounts. Okay. This is how the program works. They're going to give you 300 grand a trade, but there's rules included in this. Number 1, you can't hold through the overnight session. So you can't hold past 4:59. Okay. Right before that, you have to be closed. If you break that rule, you fail the test. You cannot lose more than $7,500. People are always like, how do they give you 300 grand? That makes no sense. Well, they're not actually giving you $300,000. Not taking a checkbook out and saying, here's 300 grand. Call us when you're done. No, that would be like totally crazy. What they do is they're basically giving you electronic access to an account that has buying power equivalent to $300,000. And then they are going to electronically limit the amount of money you can lose. So if you lose $7,500, you are pulled from that. But one of these programs I work with, it's really cool because they actually allow you to have multiple accounts that all execute under one account. So I've had traders in my room literally get 10 accounts, $300,000 each. So they're putting up no money and they're in control of $3 million. But they don't even use near close to the leverage that they are actually allowed. And that is extremely important. They probably use 1/10 of the leverage that they are allowed to use because it is so important to control your downside. Controlling your downside comes first. The upside comes later. So that's kind of that program. I know it was probably a little bit of a tangent on what you asked me as far as how much money you need, but $2,000 to trade micros, but definitely start with the demo first.
Beautiful, beautiful. Now, you've given us some insights throughout this interview of your room. Can you first, it's called Startup Trading. Give us a little bit more details behind the purpose of the room. Okay. How is it like when let's say I join the room, one of our listeners joins the room, what can they expect? And what's the community like?
Okay. So it is a primarily futures-based focused chat room. Obviously, we trade 4 markets. Most of the people in that trade room that, the guys that really stick around, and I have students that have been with me for, 7+ years, we're all trading the same markets with the same strategy. So I think it's a really concentrated chat room as far as like the conversation. It's not a wild conversation like I've seen in a lot of other chat rooms. I'm part of other chat rooms. I have friends that run other education, and they're great. But what I noticed is, especially in like a stock chat room or something, like everybody's trading a different stock. Like everybody is trading a different strategy or some form of a different strategy. We're trading the same 4 markets. So the conversation is more focused, and we're all trading primarily the same strategy, or we're all aware of exactly what's going on within that strategy. So every morning there's what's called a trade plan that we do. And I have one more moderator. His name's Perry Wilkie. This guy's been trading longer than I've been alive. And he's a data scientist, just a total genius. He, in fact, came across some of the stuff I had put out on YouTube about 6 years ago and wrote me an email saying, hey, man, like I've seen a lot of technical analysis. I've studied almost every single strategy. I've back tested it. He's like, this is the first thing I've ever come across where I can clearly see that there's an impact in the market to what you're referring to. And I was like, well, that's quite the compliment coming from somebody who's, been in the markets longer than I have. And he's just the greatest guy ever. He does volume profile analysis, wrote his entire program for you guys know what volume profile is. He literally pulls the data from the CME, loads it into his computer, and does analysis this way. Like, this guy's next level. And so in the morning, he'll run all of that data analysis and do about a 10 to 15 minute video on the indexes at 8:45 in the morning. He then shares his support and resistance levels that are gone over in the video, and then I jump on. I run through the four markets. Occasionally I'll look at Bitcoin, gold, or oil, which are just, three other markets that I will, swing trade now and then, but not a daily trading vehicle for me. I go on and I start mapping out each individual market, what I'm looking for to happen at what time, etc., giving if-then scenarios. What schools we use Thinkorswim. It's not necessary to have Thinkorswim, but one of the software functions inside of Thinkorswim is after I do my analysis, I then share all of the support and resistance levels that I've determined to be of significance in my video to the traders in my room. They can populate it on their screen, and then my screen continues to run throughout the day. I'll take questions. So if somebody has a question in my Discord, hey Jack, I'm looking at 4782 in the S&P 500. It's a support level. We're coming into it. What do you think of that level? I get on the microphone. Hey, we're coming down. The momentum is picking up. I would wait, 10 minutes after reaction. Whatever my answer is, I'm providing there. Like, I'm wearing this headset all day long. And then I also do what's called an execution screen. So I basically use 2 monitors to trade. I don't use anything else. I've traded on 8 monitors. I've traded on 4 monitors. I've traded on 3 monitors. I've traded with every setup under the sun.
You don't need a fancy setup to trade.
You don't need a fan. I got used to this because I was traveling. Like, I lived in Costa Rica, I lived in Mexico, and it's like, how am I going to take a bunch of 34-inch monitors with me? And it's like, I was thinking about it when I moved to Costa Rica. I was like trying to say, I'm like, how am I going to pack this 34-inch monitor? And then I'm like, I'm not going to be able to pack it. Like, I'm just going to have to figure it out. And then what I realized is when I'm only trading with 2 monitors, I'm more focused. I don't have YouTube up. I'm not on anything. I have one monitor where I'm doing my analysis, and I have one monitor where I'm doing my execution. What else do I need? And really, if you're trading stocks, I think it's hard to look at. Like, I don't trade stocks. I'm not looking at, 20 different markets. I'm looking at 4 fits on one screen. So for me, that style works. And I broadcast both screens. You see them stream all day. So you'll see on one screen my orders as I'm placing them in real time. And then on another screen, you'll see my analysis and hear me on the microphone, which I don't really know of another chat room that offers that. Maybe there is one. I'm sure there is one. I don't research every chat room. But I think that's, pretty unique because it's
transparent.
It's transparent, and it's a tight-knit community. Like, you're seeing everything I'm doing. Like, you're seeing me. If I'm having a bad day, like, you're seeing me get my dick kicked. Like, if I'm having a good day, you're seeing that too. Like, you see the reality of trading, You may not see the pouty face if I lose like $5,000 in a day, but, I don't run like a webcam, but, it's my screen. It makes me a better trader. I love teaching people. That's like the coolest thing. It's also kind of surreal sometimes. Like, people will recognize me in public, which sounds so stupid. Because I think like what I do, like, I'm just like a nerd on a computer, like sharing trades and stuff. Like, by no means. When I was in Mexico last year, I had, one kid from Germany came up to me and said, "Hey man, are you Jack from Startup Trading?" And I was just like, "What is, like, I'm in Mexico. You're from Germany. Like,
wow.
How do you even know?" Yeah, it's pretty surreal. I was out I don't go to clubs too much, but I was out at one the other week in Chicago. And I see these kids. I was just up at this table, and these kids are like looking at me like they know me or something. But I knew, I'm like, they gotta know me from like thing. They're like, "Dude, are you Jack?" I'm like, "Yeah, what's up?"
Nice, nice. So
So
I
funny.
want to share before we move forward. I want to share a couple stories when I first met your platform, and I met you online, which was one of the things that I learned from you was the markets. But when I first got started trading, it was just stocks, individual stocks. So it was just individual stocks. I knew nothing about the S&P, nothing about the Dow. So when I jump into your community, I'm like, okay, look at this overview of the market. So that's the main thing that I figured out. And second thing was the VIX. I had no clue about the VIX when I started trading. No clue at all. I didn't know how that was affecting the markets. I was like, this is not important. And then you explained it, and I was like, wow, this should have been the first thing I learned. Like the overview of the markets, I think futures should come before trading stocks. I think that should be the starting point. Usually people start with stocks and then do futures and figure out what futures are. I think the S&P 500 is the most talked about thing, and people don't focus on that. So that's, I want to appreciate that, and thank you for that. Second thing is, and I don't want to motivate anybody else to do this because I did this like 5 years ago. Um, I was doing the Top Step Challenge, and I was failing miserably. Like I failed like twice or three times. And I reached out to you. I was like, hey, Jack, look, these are my trades. These are my executions. What am I doing wrong? You're like, dude, you're not letting these positions hit the level that you're predicting. So I was just closing out my trades immediately after they were green, like $20, $40. I was looking for $300 gains, and I was setting up the levels correctly. I was just not letting it run to the targets that I had set. So those are the things that Jack provides in his community, and I've learned tons from. And then I wanted to share with the community how important futures is to your trading and to the overall market, regardless of what you trade, stocks, options. Like that should be your first go-to. The overall market, see how the S&P, like if you are trading Apple and you're not looking at SPY, then that's a huge problem. Like you need to be looking at the ES before you jump into Apple, Amazon, or anything like that. Look at the overall market, see how it's doing, and then from there you can jump into your individual names and figure out what the volume is, and whatever steps you take. So I want to thank you for that. And now just to close it off, the last two things. What's your market outlook for 2022? Like, what's your expectations? Give me your take on this. Like, what do you think is going to go on this year?
Oh man, I mean, I always like to say that I never like to give long-term outlooks, just because I don't like to trade with a bias. I mean, I'm a two-sided trader intraday every single day. So as far as my long-term outlook, I think at some point we'll pull halfway back from the October low. I just don't know when it is. The way I look at it in the market is more if-then scenario. So that's an if-then scenario. Obviously, we have the Fed hikes. Uh, we've been printing money like crazy. Assets are most definitely inflated, and I have never been somebody who's been like, this is the top, this is the top, and I'm still not like, this is the top. But there is absolutely, I think, going to be a more of a transitionary year. Not that I think we're going to sell off, but with the Fed raising interest rates, they're calling for at least 4 times. I think we'll probably just not perform as good as we've performed over the last 5 years on average. And I think at some point this year, we'll have a 10 to 15% pullback, and that'll probably be when you want to start picking up small caps. I think small caps will be the better investment at the later part of the year, but only after the S&P and the NASDAQ flushes out. So when the S&P and the NASDAQ flush out, I'll probably start to look, and this is more of a long-term outlook, which is really unrelated to my trading, but the small caps are already getting destroyed. You look at some of these high-flying names, what you're going to want to do if you're a little more in tune with the market is just have a list of stocks that you are potentially interested in investing and holding 5 to 10 years, and don't buy them yet. But when we start panicking, when the bottom falls out of the market, when the S&P is down 15%, go to those names and just start buying them. But not until then. So that would be like my long term. I have a couple bets with some of my friends last year. I bet my friend, bet my friend that Bitcoin won't hit 100 grand. So I'm not a Bitcoin bear by any means, but I look at it like, if you guys, just to plug my own Instagram, I have my Instagram handle is literally @trader. Be aware of fake accounts if you don't follow any finance guys. I have fake accounts all the time, but I literally posted when Bitcoin hit 68K. It was a target I'd had based on a mathematical calculation sequence that I trade on. And I always like to troll the Bitcoin community because I'm sorry for you Bitcoin hodlers out there. Like, they just hold. I don't just hold. So I'll actually trade it. So I literally posted when we hit 68,000, it was a target. And just the other day, I'd posted before the breakdown to like 41,000, 40,000. We were still up at 45. Called the breakdown, called the reversal. Now we're reversing. So actually, got long Bitcoin at 41,000. But to me, it's a really, it is a really tradable product. But as far as it being an investment vehicle, I mean, the runs happen, and if anybody made a ton of money, great. But at the end of the day, you got to trade these products.
Beautiful, beautiful. All right, Jack. This is the last section of the podcast, and it's called Legit or Bullshit. And it's, I give you a statement and you tell me if it's legit or it's bullshit. So let's start with the first one. The best traders don't post their profit and losses.
All right. So I'm going to go ahead just literally from my room alone. I have traders in my room that are much better traders than I am, which is fine by me. I mean, you can't be the best. And the biggest traders in my room do not post their P&L, and they're guys, and I know them personally. And they're guys that put up 6-figure and even 7-figure days, and they never post it. But they're older guys. To be putting up that kind of money, like, you've been in the game a while, and like they don't get the excitement. But I think it just depends. But I mean, clearly the biggest traders do not post their P&Ls, because the biggest traders' P&Ls are like houses on a daily basis, and you never see that shit on Twitter. Like, there's maybe a couple of guys that like throw up some huge numbers, but in my room specifically, the best traders do not post. But it's cool if you do, and cool if you don't. Whatever.
Beautiful, beautiful. Second thing is technical analysis. Is it legit or bullshit?
I mean, I think it's legit if you know what you're doing. There's definitely forms of technical analysis that are bullshit, I think. And there's forms of technical analysis that are legit, but it's legit in combination with risk management, for sure.
Beautiful,
legit.
Beautiful. Trading part-time, legit or bullshit?
Legit. In fact, I have a lot of really good traders that trade part-time, and I think part of the reasons that sometimes it is even an advantage is they're not forced to sit at a desk. They have some other purpose in their life. So they're coming in, in their profitable time frames, mostly the morning, and then they're doing other shit. I know a lot of traders that they feel like because they trade full time, they need to be at the desk all the time. Even myself, like, I have this rule, like, after 11:30, like, if I've made X amount of money, like, I just leave. So many people give up their gains in the second part of the day that oftentimes having something else to do is an advantage, because most traders, I would say, I don't know what the number is, so I'm not even gonna, but most traders, their most profitable time frame is the morning.
Beautiful, beautiful. All right. Thank you so much, Jack, for joining us. It was a pleasure to have you on. Dropped a bunch of nuggets here on this podcast. Hopefully everybody picked up something, and make sure you follow Jack @Trader.
@Trader. You can find me on YouTube. Just look up Startup Trading. My website, startuptrading.com. But if you have any questions, you can shoot me an email too if you want to follow up on this or have any questions on that stuff. But I thank you for having me, Jason. It's been a long time coming for us to get on here. I've known Jason for 4 or 5 years or something. So appreciate you having me on, man.
Beautiful, beautiful. Thank you so much, Jack.